Hello and welcome to CMC Markets on Friday the 24th of January and the weekly market update, my catch up with the sales trading desk. Joining me this week is Alex.
Hello Michael, hi guys.
Long time since we had one of these chats. It has indeed, but it's been an interesting week this week. We're starting to see some evidence of a bit of a turnover or a turn lower in equity markets. The S&P 500 here, last 2 days pushed a little bit lower. We can see that on this chart. And it's approaching a key support level and a potential triple top. Clients have done well out of this particular move, haven't they?
Yeah, they've done well. I mean, it was looking like business as usual at the beginning of the week, but as I said, we've had a bit of a turnaround. Risk off. Another failure to break the May highs, 68.80. I mean, last time
on the FTSE 100, UK 100.
On the UK 100, yeah. Last time we saw that. That was the tapering fears starting to creep in last year. Last time we saw that was on the FTSE 100 anyway, 12% correction. I don't think anyone's, certainly not at this stage, starting to reach for the tin hats. No. But there's definitely a turnaround in sentiment at the moment. Clients pretty much undecided.
Yeah, certainly on the UK 100, because you were saying to me just before we came on air. That the client sentiment is actually diverging in terms of on the UK 100 clients are probably more long, whereas on this they're actually more short. So I think that points to a certain amount of indecision. I think ahead of next week's Fed decision.
Yeah, quite.
What are clients thinking next week with respect to the Fed? Do they think they'll see another 10 billion, or are they a bit undecided on it? Because I certainly think that the markets are starting to price that in, aren't they? Because it's starting to roll over. Earnings aren't particularly great. Yeah. Do you get that sense?
Yeah, that is the overwhelming sense at the moment. Clients are positioning themselves for what could well be another drop in QE. It's not quite. It's certainly by no means obvious, and I think what happened last night shows how quickly sentiment can change.
Yeah, I mean, it's been over the last 2 days we've had this turnaround, and it's been quite rapid. China-driven, maybe, whatever you want to think. Yeah. Next week is also quite a big week. As I say, we've talked about the Fed, US Q4 GDP. How much will the bad weather in the US affect that? So, I mean, that's also something else to bear in mind. Talking about that, it's also been a big week for the sterling, the pound. Mark Carney last night in Davos hasn't quite thrown the unemployment threshold out of the window, but given what we've seen on the pound this week, as we can see from this chart, we're back at levels last seen in 2011. Yeah. So, clients, what's clients' view on cable? More upside?
Well, with Carney, I mean, he's staying vague enough so that you can't really, he's getting hammered in the financial press. Obviously, they're bound to pick on or try and pick him up on the guidance. I mean, the way clients view it really at the moment is that, I mean, they would like it to be staying within that range, 163, 165. Clearly now we've broken out, and it's the situation is, are we going to continue to push on, or are we going to get back down into that range? It's looking very much like a breakout at the moment, I mean, from Tuesday's unemployment figures. So we'll
7.1. And the threshold was 7%. Again, next week, it's a big data for the UK. Q4 GDP, again, that's likely to come in 0.7, 0.8. I think more important than that is the consumer credit numbers. How much credit, how much borrowing did consumers do to really boost those retail sales numbers that we saw in December? And again, I think that could dictate where cable goes. And certainly, I think our clients are feeling the pain a little bit on the short side. You saw that graphic there, 89% short. So, once again, it could be one of those pain trades, but it's a two-way thing. What does the Fed do? How does the UK data come out? Let's move on to earnings, because I think one of the things I have noticed over the past week or so is how not disappointing, but the earnings haven't been great, have they? And our clients love Apple, and they're due to report on Monday. And we've had an awful lot of chatter out of the US about Carl Icahn buying loads and loads of Apple shares. He's obviously looking at this chart.
Yeah, quite. I mean, we see huge amounts of buying in Apple amongst clients, not just from a, I guess you do get the Apple lovers out there. You're the same with your gadgets. One of the worst I've seen, but
what can I say? I love a gadget.
But the way they're looking, in terms of as a long-term investment, people are still very confident about Apple, but you can't take your eyes off the competition at the moment, and that's exactly the way Apple are viewing things at the moment. They are still playing catch up to the Android market,
especially in China. But they signed that big deal with China Mobile, so hopefully that'll be a positive. But you talked about concerns about revenues and earnings a minute ago there. Samsung this morning reported a slowdown in handset sales. So could that be reflected in Apple's results on Monday? So that's one thing to keep an eye out for. There's no such thing as a one-way bet.
No, of course not.
So clients like Apple, not such a big fan of Royal Mail though, are they? Because I think I talked with it was Jamie, it was Nick last week about Royal Mail. And our clients were short last week, and they've actually done all right on Royal Mail. And I think they're still looking to sell into strength there.
We've seen more selling this week. Yeah, it's been a good trade for them. It's quite unusual for us to see large amounts of short selling in a particular single stock. We often, the general feeling for most clients on single stocks is long. But Royal Mail, we've had plenty of short sellers, and they've done very well in the last couple of days.
We were about 605 at the beginning of the week, and we're now below 590. So tells its own story. Okay, thank you, Alex. As I say, that Royal Mail reported their volumes earlier this morning. Parcel volumes are flat, which I think is a disappointment when you consider that an awful lot of retailers reported record online sales. So you would think that would be reflected in the parcel volumes for Royal Mail. It wasn't, and I think that's why we're seeing the weakness at the moment. Important things to watch out for next week are FOMC, UK and US GDP, and also European EU unemployment. Will that come down from record levels? That's it from me and Alex this week.
Thanks,
you,
guys.
Until next week, this is Michael Hewson and Alex Young talking to you from CMC Markets.